Hello and welcome to our viewers on Crux Investor. We're here today with Brandon Munro of Bannerman Resources. We're going to talk about a variety of subjects. You can look at those in the description below, click on the relevant timestamp and that'll take you to that part of the video. And if I could also ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, click the notification bell. So let's talk to Brandon. How are you, sir?
Great, Matthew. How are you?
Welcome to London.
You put on some decent weather for me too.
We have.
It's been an effort for you.
It's been a rarity, but also we're not going to see it because we're in here. So I want to talk to you about a few things. So you're here at the WNA. You've been presenting the fuel report.
We launched it. Yeah.
We launched it today. And how did that go down?
Went down really well. So for you listeners, as you know, it gets released every 2 years.
2 years, yeah.
This is the first time in 8 years that the projections have gone up.
Right.
It's been a change in methodology. It's been a lot more thorough. It's had a lot more economic input into it. And it's a product that is just so much more useful and tells a better story for both sides of the industry.
Let's help people understand what it's for. So the fuel report takes a global view of the uranium market.
Of the entire nuclear fuel cycle.
Nuclear fuel cycle, okay. And you've been part of the committee and group putting that together and gathering data from various sources. So tell us a little bit about that and what people use the report for, who uses it.
So basically what it does is it looks at the entire nuclear fuel cycle. Starts with uranium, moves through conversion, enrichment, fuel fabrication, and then amongst that you've also got secondary supply. Now that on its own isn't very useful unless you've got a demand picture. So each of those components has a committee or a working group and there's a chair of each of those and I'm the co-chair of the demand picture. So I sit on that with an executive from Électricité de France, the largest utility in the world, and so between the two of us we've had the interesting task of building a demand picture in 3 scenarios that the whole industry can buy into. And the report, it's used for industry. A lot of the parts of the nuclear industry will use that report for their own judgment. It's used for policymakers and also it's increasingly becoming used as a reference tool for the financial sector. And we're hoping that with the quality of the analysis and the rigour involved in the methodology, we might see that.
So what's changed there? You said you've kind of re-engineered it, as it were. There's a lot more in there than there was before. Why the need for the change? What was missing before?
So I think it was starting to lose its credibility, particularly on the supply side. The input
why was it losing credibility?
Well, the approach that had been taken was very much absent of any economic logic. Now, on the one hand, there's a good reason for that. There's very strong antitrust requirements. You can't get a bunch of buyers and a bunch of sellers in the same room and just allow an all goes, anything goes situation. So it can't talk about price, it can't make price projections, it can't talk about the consequences of certain prices not being met. But in my view, it had gone too far in stripping out the economic logic associated with that. And so that was a key part of perhaps why I was asked to put my hat in the ring there, to introduce more of that and also to create the sense of confidence where we understood exactly where that line was and we were able to step towards that line rather than just be petrified that anything economic might breach some of the anti-competitive constraints.
So if the economic component wasn't there, what else were people looking into the report for, in terms of guidance? What was it telling them?
Well, the last one told them, for example, that there was a balance in the market until 2023. And as an illustration of perhaps where many of the authors of the report didn't have a market-facing perspective, when they delivered that at this time 2 years ago, that 2023 was rounded to 2025. So as we know in commodity markets, you can't just round an inflection point by a couple of years and expect the financial community to take it seriously.
This is very naive.
Well, it's people who, they just don't spend their time in the world that you and I spend our time. Very, very intelligent
Why have they been
people.
hired? why were they putting the report together? Because, you know, that's a long time, right? 2023 to 2025. Quite frankly, 3 months is a long time in this business. If we look at what's happened with gold recently, you know, why was the report not getting the due care and attention that it should have?
I think it was just what the perspective was for its purpose.
Right.
So there were certain aspects. There's a bit of a tussle that goes on between the buyers and the sellers, the utilities and the uranium suppliers and the other suppliers.
Sure.
And when you've got a good, balanced tussle, you end up getting a very high quality product, and that's what we've had this year. The previous year, which was before my involvement, that tussle wasn't particularly balanced. It was very dominated by utilities, and perhaps they had an agenda there, but even if you didn't jump to that conclusion, you'd say that they didn't have the miner's perspective. Some of the mistakes that often are made by people who run nuclear power plants is assuming that idled capacity can just come back on like that. Right. For example, there was a lack of understanding of just how complex it is to even bring on a mine where the plant and everything else is built already.
Sorry to labour this a bit, but it's a big thing. This report is a big deal, okay? And you know, I think investors want to understand the importance of it or the influence that it may have. So if I'm looking, I mean, and I need to say, everyone's got their own business model, everyone's got their own agenda, okay? So I do appreciate it may be difficult to manage that, but why wouldn't the WNA attribute the importance to this by hiring independent sources? I know that you've got a bunch of people coming in together, but which make it truly independent to provide, you know, truly relevant information. Otherwise, it's just a little bit generic.
Well, one of the selling points of this report is it has been produced by members who, whilst they wouldn't have that independence tag, they are the people in the industry, the people who run the industry. And I think one of the things that's made this report, and certainly an improvement, is that we've had a lot more involvement.
Is it perfect?
No.
Okay.
Because it can't talk about price.
Yeah, okay.
And any projections are imperfect by their very nature. Sure. And for example, we had a cut-off time on our demand scenario, so it's only since that time that Kazatomprom's announced the extension of their supply cuts. So it's already out of date in that sense, but kind of on the right side of the ledger.
Right.
I mean, the other thing that's really changed is there's been a lot of positive news in the nuclear sector in the last 2 years. So the previous report assumed that France would need to drop its nuclear influence by 2025.
That's changed.
Now, one of the criticisms of the report is they even included that in the upper case scenario, which dragged down what otherwise should have been a more buoyant picture of what's happening in an upper case. So now we can put that in the reference case that it's been extended out to 2035, and in the upper case we can take a view about what we think actually needs to happen in France and where public policy might go, and then we can temper that even further. Right.
So why should people pay attention to this report? You said it's been received positively. Sorry, you said the numbers are positive for the first time in 8 years. Has it been received positively by the people who are in the room with you?
Yeah, very much so.
Right.
So at the
why do you think? What were they looking for? What do they need it to be?
First of all, it needs to be something that people can have confidence in. If you've got an industry that has components where this is the only effort that they're going to put into understanding supply demand. It might be someone within the nuclear industry who just isn't involved in that day to day. They don't want to hear other people saying, oh gee, I'm not so sure about that report this year. They want to hear people, as we just had at the launch a few minutes ago, say, well, that's the best report we've ever seen.
Right.
And this is the 19th edition.
Best report they've seen from the WNA?
Yes, the best nuclear fuel report.
Right.
There's still calls that it needs to talk about price to be fully effective. But what it does, of course, but it can't. There are some things that could possibly be done, and that's something that we'll need to look at for the next edition.
Okay.
But what it does do is it gives the financial community, as one of the key audiences, the tools to then impose their own expectations of market forces and therefore price onto it.
Sure, you consolidated a lot of information together in one place, and it will help financial community, funds, investors broadly, institutional investors broadly. Because, sorry, do you charge for this, or is it free?
WNA charges.
Right. Okay.
Yeah.
Sorry, you WNA charge for this. Yeah. So it's going to be more likely institutional rather than retail, family office, or high net worths looking at this. So it gives them a good sense of what the market's doing. They're going to have to get their analysts on it and try and insert figures to get their own view of the marketplace. Okay,
yep.
Right, so let's park that, because you were involved with that, but that's not your day job.
Yeah, surprisingly enough.
You run a little company called Bannerman Resources.
I do.
You do. Uranium business.
Sometimes wonder when you get your head into chapter 2 and you're redrafting the whole thing. But
yeah, exactly. So that's launched. That's today's news. So we're going to look forward to Bannerman. So why don't you just give people a quick summary of what that is, and then we'll kind of talk about it.
Yeah, so we're entirely focused on the uranium sector, and in particular an asset called the Offtake project in Namibia. Namibia is very, very important, as we'll probably come on to in a moment. It's a very advanced asset. We completed a DFS back in 2012.
Yep.
And we've spent more than $80 million developing it to that point. Yep. And the reason why we've been able to do that is we were able to raise the bulk of that capital during the last boom. And that's the money that's needed because the project is simply so large. The total resource is 271 million pounds.
So that's very
and
large.
The mining reserve is 130 million pounds.
Right.
So it's the largest project, undeveloped project with a DFS in the world.
Right.
And since then we've taken it further by constructing and operating a pilot plant for 3 years. It has the advantage of being extremely amenable to heap leaching. And we've now been able to prove that over a 3-year pilot plant program. And the fact that it's in Namibia, very technically simple, it's an open cut mine, or it will be, heap leaching and so on. It has the strategic attribute of being simple and reliable.
It does. It's also huge. You're moving and the grades are lower than definitely Athabasca or Australia, or and this is a bulk operation. This is about moving lots of earth, processing it as economically as possible, but you do have a lot of it. So, but that comes at a cost. Yeah. So you've got to be able to raise the capital expenditure to be able to get this thing into full production. But it makes money.
Well, the thing is that it does come at a cost, but we're in the very fortunate situation where it doesn't cost us now.
True.
So we're in a position to be patient. We're in a position to see this market re-rate, adjust.
No, I get that. And so I wasn't saying that it was cost money now. I know you run a tight ship. Your G&A is low. You don't pay yourselves ridiculous amounts of money. And I get all that. You're doing all the right things, for sure. But at the point when the market, whatever that point is for you, because everyone's going to have a different point in terms of price discovery. For some it's going to be 40, some it's going to be 60. Wherever you guys decide that you can press the green button, you're going to need to get into, ready state to either raise the capital, if you're not already having those discussions. We can talk about that in a second, but then it's a big operation, so it's going to take, how is it going to take you to build the plant, etc., as currently laid out with the DFS?
So from the day we sign financing documents in whatever form they take, to full ramp up is 3 years.
Okay.
Which includes 2 years of construction.
2 years of construction, and then what's happening in the
So half a year of detailed design on the front end, which could be done in parallel with financing if need be, and then half a year of ramp up.
Right, okay. So it's not unreasonable.
And it's because of the simple nature and consistent nature of the ore body and the project that for such a large development, it can be done relatively quickly.
Great jurisdiction, tax, licensing, all of that kind of stuff. Again, it's a good country to do business in. I totally understand that. So what are the obstacles between now and pressing that button that you foresee that, not necessarily keeping you awake, but things that you need to deal with? Is there much left?
It's really just price.
Just price.
It's just price for us.
Okay.
If you look at the things that you would normally need to tick through, for any mining project, you've obviously got to do the engineering and get to a feasibility study.
Yep.
We chose to take that to the next level with the pilot plant.
Yep.
Very important in the uranium sector is permitting.
Absolutely.
So we have our environmental and social approvals, and our form of tenure is ideal for this situation. It's a retention license,
right?
Which basically means we've proven to the Ministry of Mines that we can do everything required for a mining license, except it's not financially attractive at the moment. So then it falls into a retention license. We don't have any obligations to keep spending, etc., etc. But when the time comes, we just need to show the economic viability in it, and we apply for a mining
What's that
license.
entail then, economic viability? Is it literally a piece of paper going, well, this is how it stacks up, or do you have to have someone offering you money, or show prove them to them that there's someone offering you money to build this thing?
You just need to show the market conditions make it viable.
Okay.
And we are dealing with a government that's fairly sophisticated with that. It's uranium's extremely important to Namibia.
Okay, so I'm trying to paint a picture of where you sit in the marketplace. Okay, so like I say, there are high grade stories which we've heard, after basket based stories. You're not that. So like I say, you're going to have to raise a lot of money. Your big operation in terms of the amount of pounds in the ground, which is all good. The capex is what, somewhere just shy of $800 million bucks?
700 US.
700 US. Okay, fantastic. And so, who are you having those sorts of conversations with? How are you going to? What's that construction of finance look like, and where does it come from?
So, for a start, we're not having those conversations at the moment. It just makes no sense.
Okay.
We'd be wasting people's time, and we'd be creating the wrong expectations to have those conversations at this time in the sector. The thing to look at is, because of the unique position that we're in Namibia, it's a very large project. We will be attractive to large scale end users.
Being like, who do you mean?
South Koreans, Chinese, Russians, Indians, Middle Eastern groups. And if you look at our project, average production 7.2 million pounds. That can service 17 large-scale nuclear reactors.
Yes, it's significant.
It's very significant, and there's very few projects in a jurisdiction like Namibia that can do that. So the prospects of getting, for example, a soft loan in exchange for offtake, partial offtake, I think that's real. I think there's a real opportunity to do that.
It's part of the solution, isn't it? You're going to need to piece this together, aren't you? Because of the sheer scale of it. Or do you think that, like say, Indians, Saudis, whoever, there you go, there's all of it on the table.
Well, nothing's quite as easy as that in the uranium sector.
Well, or mining, because it's like I say, it's a lot of money. That's why I'm interested, because I think I get the asset and where you're positioning, and you've done a lot of work, and it's a good story, right? So to get to the point where you can press a button, you're going to need this money in place, and that's why I'm trying to understand is, do you have a sense of what that needs to look like? Even if you haven't had a conversation, you must have thought about, right,
sure, yeah.
Offtake is one thing, but you ain't going to get 800 or 700 million bucks of offtake, are you?
Well, I don't think you'd structure it in that way.
Well, that's what I'm asking.
The way, there's different scenarios, and I think the conventional financing, the way that you'd finance a gold mine, for example, is unlikely to be attractive from shareholder value perspective. As you were alluding to, there's a large equity raise that would be required to go against the bank financing, etc., etc. What's far more likely and far more attractive would be to go to one of these groups and say, well, we're not going to give you the lot, otherwise there's no point us being in business as an operator. Perhaps we can talk about a 25% offtake as an example. That would be enough to supply 4 to 5 large-scale reactors, which the construction cost would be $20 billion. So what we're looking for is a soft loan arrangement for the full 700.
Okay.
That gets paid back.
Okay.
Well before the mine runs out of material. And when you look at the relative economics and what that supply security does for numerous potential offtake partners, that's attractive. Now's not the time to talk about it, because the perception is that there's lots of uranium around. So we will need the market to tighten up before we're going to get the attention of the groups who would be interested in that.
Okay. Thank you for that. That was the bit that I wanted to focus on to help complete this picture. Okay, but you have just said something which I also want to talk about, which is the supply in the market. Okay, you just said something to me. There's a lot of supply at the moment. When's that tightening up? Because I've had a bunch of views over the last couple of days. So what's your take on it? Because it seems to be new news all the time. There's people shutting off supply, but there seems to be supply suddenly appearing from we didn't realize was there before. So
if you're referring to the Japanese inventory, I think there's a lot more to the story than that. Okay. But maybe we can come back to that. It's interesting because...
Do you know anything?
Yeah, of course.
Okay, of course. Okay, good. Well, just tell us, because again, we've had a couple of views on that. So what's your take on that?
So the way that it was reported, the perception is that all of a sudden there's a large volume of Japanese material that's going to come out into the market.
Yep.
There has been a little bit that's been worked into the market over time, and we're not talking a large volume. We're talking about a small mine over that period of time.
Yeah.
The main source of supply from Japan is what's called perfumed fuel bundles. The way to think about that, it's fabricated fuel.
Yeah.
It's perfumed because it's kind of gone off, if you know what I mean. Like it's been sitting around waiting for restarts to happen, and it's no longer usable to simply put into a reactor.
In its current form.
Correct. Right. So what do you need to do with that? You've got to send it to defabrication, where it gets pulled apart, turned back into an oxide, purified, refabricated, and then sent into the market.
So you can choose to do that, or you can give it to someone else who'll do it. Is that?
Well, when the time comes, and it will come, the Japanese utilities who, there's a couple that won't be operating nuclear reactors.
Okay.
When the time comes, they'll have to reach an arrangement with the fabricators and potentially an end user to buy new fuel rods that have been through that whole process. But it's not very attractive because of the amount of work required to get it into a usable form. It's certainly not attractive for the Japanese government because it is something of a political admission of defeat when they're trying to win public support for what is an extremely necessary nuclear program that continues there. So that's why I say that story has attracted the wrong attention at the wrong time. Some of the analysis that Reuters did was actually quite good in terms of breaking down balance sheets.
Right.
And they pointed to one of the key issues with Japanese inventory. That's the moment the utilities start flogging it into a depressed spot market, they're going to have to revalue it. And most of that stuff is sitting on their balance sheet at about $70 a pound equivalent.
They get hit twice, as it were.
They get hit twice. So that's why there's been very little coming into the market.
And so we're talking about small volumes. It's going from one utility to another utility, or to someone who can actually deal with this perfumed product. Is that?
It'll have to go to someone who can either reach an arrangement to pay for all of the defabricating and refabricating.
Maybe another utility might be prepared to do that.
Or it'd need to be sold back to, say, an enricher. Who might then put it into a long-term EUP contract.
That's the most complete answer I've heard to that question. Anyway, sorry to segue you off from...
Where were we?
We were on supply. We're saying there's a potentially the supply story is still not complete. You know, there's still product coming into the market, not just the Japanese, but other things as well. So what do you know?
About there's availability and there's perception of availability. And this market is running on perception of availability.
Seems to be.
We've got a spot price that's still depressed at circa $25. But when you start peeling back the onion and you look at the volume that's being done, it's very, very thin. If you start to see any real pressure on that spot price, you're going to be on the way to achieving some level of price discovery. The volumes have just been very thin lately, so we don't really know. Like a motivated buyer, or particularly a couple of competing motivated buyers, I think would have quite an effect on the spot market.
But again, you go back to that story of Cameco trying to buy £1 million or so in the market probably a couple of months ago now, wasn't it? Or maybe not that long. But unable to find product at the price they're willing to buy, and sellers unwilling to sell at the price that was being offered. So are you saying product is there, isn't there, or isn't there at a price? What's your sense of the market at the moment?
It is there in small volumes below, say, $30.
Right.
You'll see more become available above $30, but I think that'll generate it, but not that much.
Right.
Not that much. There just isn't very much mobile material.
Okay.
And part of the thing is, the moment that perception changes and becomes more grounded in what we think the reality is, that'll have two effects. One is this whole perception that still exists in pockets of fuel buyers, which is, look, there's lots of material. 12 months ago, I'd say it existed in the majority of buyers. Now we're starting to get the key consultants in the industry to those buyers who are saying, it's starting to tighten up, be careful here.
Right.
And I think you'll be talking to one of those shortly.
I will.
And but the other thing it does
Yeah.
is inventory is a function of the physical volume of material versus what the utilities actually think they need. So that whole piece there is all about perception. If they think that prices are flatlining for the next 5 years, then a given amount of inventory seems enormous. The moment the utilities start to realise that the price is increasing and the material is not going to be there in 2 years' time, that exact same amount of inventory can look like it's not enough, or can look like it's just the right amount. And if you look at what, say, the US utilities have been doing, they've reduced their inventory by £11 million in the last 12 months. And they're only running at £111 million over a consumption of close to 50.
Supply demand it's true whatever the commodity or whatever the product or whatever the market, and you see this dynamic between what the suppliers are saying and what they're actually capable of delivering, because price is relevant to them, right? There's only, at a certain price, there's this much mineable ore. If the price is less, it's this much, smaller amounts available. And utilities don't want to show their hand because, quite frankly, come on, if you can pay a low price for this stuff, it's great. But at some point, they need to understand when they need to press the button on price, because if they don't give enough warning to miners, there's going to be a real shortage issue at some point, because you're talking about a 3-year ramp up. Other people, if I'm looking at fission, longer, much longer, probably double that, maybe
and
even
if you
more.
don't have the permitting, it can be anything.
It could be anything, right? So that there's both sides are playing a dangerous game in a way for what is, in the total nuclear cycle of cost, quite a small component, isn't it?
Yeah, it's about 6% U3O8 in the total cost of producing nuclear power.
So why play that game? Why is this dance going on?
Yeah, it's a really good question. And to understand that, you need to spend time, as I've been able to, with the fuel buyers and even their senior management from time to time, and understand where these guys fit into what is typically a very large electricity utility, who not only are in nuclear, they might be in various forms of energy.
They've got other pressures and people dragging, demanding their money and time.
So on the one hand, we can take a very global strategic view of it all, and we can say, goodness me, we're talking about the difference, a couple of percent that it would add to electricity prices, and you're risking your security of supply.
I've heard the utility argument. Okay.
But then you look at the job that utility fuel buyers are given, and their job is to acquire the stuff at the best possible price. And there's so many parallels we could draw in our universe where you go, well, of course they'd do that. Of course they'd think like that.
But there's a point at which they won't be able to think like that. If they are the cause of people being unable to mine economically, they're almost authors of their own downfall if they don't get the timing right.
And as we saw from 2005, 2006, 2007, as long as everyone else is paying a rocketing, escalating price,
you're fine.
They're doing their job.
You're not going to get fired for that.
Correct.
Yeah.
But the moment you, as a fuel buyer, take a view that 25 looks really cheap and I can see it going to 50, therefore we're going to load up.
Yeah.
If you fall on the wrong side of that call, that is your job.
Yeah. That's fair enough. Right. I want to get back to you, the Bannerman hat on. You're running a pretty tight ship. That's clear when I look at the numbers. You're running a tight ship, and you know what you've got to do. You haven't necessarily got all the necessary overhead in terms of skill sets in-house now, but you know what you're going to need. Have you given you're not talking to people about money, but are you talking to people who you're going to need to talk to come on board to allow you not only to produce uranium, get it out of the ground, but get it to market, logistically, get it to market, sell it, get it, those buying cycles which exist, and do you have a sense of where you fit in the market compared to everyone else? Right now there's only 50, 55 companies, something like that. So it's not huge. There will be new entrants making lots of noises. So do you know what you've got to do to get product sold into market?
Sure. So in terms of what we're doing, so we're not contracting. We're not attempting to contract. That makes zero sense. That sends the wrong messages to utilities with us attempting to write contracts at the moment. But it's a relationship-based game. So how do I justify spending so much time working in my evenings and my weekends for WNA? It's a very simple answer. It's because I'm developing strong collegiate relationships with not only the people who'll be buying our product, but also the people who'll be transporting our product.
So you're managing that process?
Well, it's a natural thing to do, I think, from where we're at the moment.
I think that's some of the utility buyers trying to get in. Can you hear them? I think I can hear them. Yeah. Apologies for the noise.
Bashing the door down to get out.
Right. Okay.
So that's an example of where perhaps a less experienced person in our industry would start bashing the door down and trying to have meetings with everybody and trying to consume selling a product that they don't have to sell in the current conditions, versus working with the people and helping the people and getting to know the people, and they're great people. And it's so nice to work with the industry in a collegiate way rather than sitting across the table in a sales call.
So you've also, I guess, through your work with the WNA, got a little bit of access and insight, which maybe some other CEOs in your position with a company that's not yet in production, you've got a little bit more insight as to the way that works. Have you used that? Is that what's happened?
I think it's a fair assumption, yeah.
Right, okay. And what are those conversations telling you in terms of the likelihood of Bannerman getting into production, making money effectively? What are you going to tell shareholders?
So there's two key points about that.
Yeah.
The first one is diversity of supply is becoming very important.
And what's that mean? That mean?
As a forward-looking strategic consideration. So what it means is the most important part of buying uranium and nuclear fuel for a reactor is knowing you've got it when you need it. So there's various forms of supply diversity that are introduced. The most obvious one is commercial and geographical. As we found with the Section 232, it reminded utilities that you can't allow yourself to become geographically too concentrated, because you could have a little wobble like Section 232 going in a quota direction, and all of a sudden you have to reevaluate everything. But equally, they don't want to be too commercially constrained and too commercially concentrated, or they're only going to have a couple of sellers. A couple of sellers who they can deal with. So whilst it's not keeping utilities up in bed, awake at night yet, it is becoming recognised as a important consideration, as it has been.
So that's diversity. That was one. What else have we got?
So the other one is the supply picture in a few years' time is going to look very, very different, because when you look at the growth that's occurring in China and you look at the growth that's occurring in Russia, particularly with their export programs, that's Kazakhstan out of the picture. Out of the picture. And that penny hasn't fully dropped.
That. When you say out of the picture, why?
Because they can't produce enough to satisfy those two markets, Russia and China. So if you were to take China, for example, and Kazakhstan sits right between Beijing and Moscow. And if I was running a large Chinese utility and over the next couple of years I start to see that we're on the trajectory that is provided for in their 5-year plan. So we've got a couple of years of 6 to 8 reactor starts under our belt. And I see Rosatom doing exactly the same thing. Like we just had a presentation, their forward order book is at $133 billion US. That's exports. I'm going to start getting a little bit nervous about whether I can get my requirements out of Kazakhstan.
Yeah.
And the important part about the Chinese export program is they want to emulate and attempt to better the Russian model. And the important part of that is you provide the fuel and you take it away and you deal with it afterwards.
Right.
It's a build, own, operate in return for an offtake.
End to end, yeah.
End to end.
Yep.
They're going to be going head to head in this in a short period of time. And when push comes to shove, is your money on Kazakh production favouring the Russian export industry or the Kazakh production favouring the Chinese export industry?
Yeah.
And that's a big question for them.
It's a big question, but let's get back to my question, was what are you telling shareholders about what Bannerman's going to be able to do for them?
So, in Namibia, as the only viable project for that type of supply, we're in a privileged position. Because as China becomes more and more wary of how they're going to underwrite a very ambitious investment in an export program, they've already bought and built Husab, they've bought Rossing. We are the next obvious target for either the type of offtake arrangement that I've talked about or some sort of a more integrated approach.
Right.
So all of those two trends both point very squarely at a big developed advanced project like ours in a jurisdiction where China can actually secure supply.
So tell me about what was that? So Husab was like what someone handed over the keys and go, give me the money, you can build it, operate it, and take the offtake. It's all yours. Is that the model?
It was a takeover.
Right. Okay.
So CGN paid $2.2 billion US dollars for.
So handed the keys over. Give me the money.
Yeah.
What would you do?
I think the landscape has changed.
Okay.
I think in that scenario, what you're more likely to see is you still see Chinese takeovers. There's no doubt that once the sector moves into the next phase, you'll see that. Okay. But they'll be less willing to go in and build themselves. They'll be looking to put teams together or buy assets that have got teams, or at least the start of that capability.
And that's good for you. Why?
Well, it's not great for me personally because I don't build mines. But we've got an MD in Namibia who had a senior role with Rossing. He understands this form of mining. He was the mining manager at Rossing. Our chairman in Namibia was the MD of Rossing. CFO before that for many years. So we've got that key start that is always difficult in an emerging market to get a couple of very highly credentialed people already in the tent.
So you managed to inherit, steal, borrow the right people for your company, and that's got to help you in terms of conversations with some of the Chinese groups should they come knocking at the door.
Correct.
Thank you very much, sir.
Great
update. Lovely to hear the story. Keep us up to date with what's going on. Obviously, we'll see what's happening in the marketplace. See what the fuel report does for people. I'm intrigued to sort of see how that is received. From what you say, very positively, I wonder what people are going to do as a result.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.